All right, good evening, and today is December 14th, 2023, and it's a Thursday, the day after two high impact news released on Tuesday and Wednesday. And we anticipate, that today is gonna be a so-called follow-through day, right? Yesterday is huge move. So today we want to see if it follow through or, we anticipate it's going to be consolidated. And we did note that we will better not trading after the noon time, which is after 12, right? And that's exactly happened right here. After 12, it coming down right there. By the way, we just add the 20-day moving average. So let that may look a little bit different right there. But anyway, let me remove it for now. By the way, we did took a real trade today. I think as around here when we saw it break down here. We took right here and we stick through until it hit right here. So 33, we go in at 16 and we hit the stop loss right here, right at the high of this candle right there. And 33, 16, so about 17 minutes right there. We will get into that later, but now just take a look at the volume. So the volume today is huge. You see that? It's a huge volume. I mean, you see that? Average 82 million share. But today is 116. So 116 you minus 82 so 34 million share more than average. So it's just a huge right there. Man, look at that. It's a huge. And yesterday also a huge volume. Yesterday is 91 and today is really follow through, but we don't know because even though it's the follow through with the high volume, but actually we see that the first day that it down closed, which is closed below the open 658 345. Yeah, it's a huge move right there. Let's see what is the pre-market today. So the pre-market is the volume also huge. You see that 2 million share. That's triple. I mean, it double the average. Average is 1 million share. So 2250986 right there. Yes, the pre-market. That means, however, it's still increased because it's closed above the yesterday close. So it's still count as a green day. But if you compare with the open today, it's a down close for today. So let's see what is the daily, right? The daily time frame or D1 time frame. So we know what is this for today. So basically we have right there. Yeah, it's the first, 1, 2, 3, 4, 5. So it's a 5-day in a row up close. It's the first day that it closed below the open, which is the Dow close, but it's still above the prior day close. So we can short right here, put the prior day close right here and short them. Let's see if we can do that. We will make money right there. You see that? So that's the level right there. It go up. You can put a sell stop in here. It should be a short setup first right there. Yep. I mean, let's add the RSI here. But be careful with the RSI. We'll have the word for this later. You see the RSI is still not divergent yet on the 1 hour. I mean, daily time frame. The divergent right here and boom, right there. So mark this level also for the key level. If it come down this level, it break the level, it's gonna break very hard right there. But we look on the weekly candle, right? So on the weekly, we already see the diversion, very strange, right? But on the daily, we don't see that. You see? So on the weekly, we see that, but we thought that the small time frame will show, the small time frame will show the diversion before the higher time frame. But in this case, the high time frame, if it's strange, the high frame, the weekly, it show diversion, right? But the daily have not shown that. Okay, let's look at the 4-hour time frame to see if that's the case. Where is our 4-hour time frame right here? So our 4-hour time frame, yeah, 4-hour time frame we see the diversion. So 4-hour time frame we see the diversion right there, right? This high and this will make also the high, but it also, that's 4-hour time frame. As soon as we saw it hit, it go down to 70, we're gonna build it perfect to build short position right here. We did build that, but we get a bit, we put a stop loss too tight and we get out. I think we should hold on to that position because we buy an option at 473 at $3.45 something. But because we look at the low time frame 1 minute, we get nervous, so we get out of the trade. But I believe we should hold on to that, because on a small time frame it always fluctuates, so you have to stick through the volatility. We have to stick through the fluctuation right there in order to stay committed to the trade and see the profit realize. Okay, so basic, go back to our favorites, time frame. But maybe next year we're gonna change to 5-minute time frame, right? We do some research and the recommend is gonna be 3 or 5-minute time frame. Because the idea of 1-minute time frame is too fast and it's easy to draw us into a compulsive trading instead of patient way for the setup. So that's the double short, double-edged short right there. It's fast, give us the excitement go in and out, but at the same time, it can draw out our, vulnerability, which is compulsive, right? Fear of missing out over trading. That is a rampant, I think some people say, a very rampant issue for novice trader, for begin trader like us right there. It may look attractive, but from experienced trader, from the research we do, it suggests that that's the case. We need to step back a little bit, do with 5-minute time frame or 3-minute time frame. That's really much better, to manage the psychological aspects of our trading, right? Because trading, is 90% is about psychology. It's about a mental game. It's about the psychological skills that we need to be right there. But anyway, that's enough on that issue. But basically, you see, it opened at 472.51 and it closed. Excuse me. It opened at 472.51 and it closed at 472.01. So it's just 50 cents. You see that? The difference is 50 cents. Exactly 50 cents. Something may go on right there. So it's exactly 50 cents. So it's closed at 472.01. So basically, we try to keep track of our open close each day. It's just a mental exercise. We need to do that because based on the research we do, the trade recommended to. So basically, we read the book Stretch Mark by Linda Rusky. She recommends that as a trader, we need to try to memorize the open and close level because that's a key level. So that's an idea. We need to keep track of that. Okay, so when we see this open, right, and just go back in time, okay, so we see, we don't even see that. So we see the huge opening gap right here, moving down, gap down, and then we mark the gap right there. So as soon as above that's the gap, the low end of gap, we put in a buy stop. I mean the sell stop order right there. And this is what the setup that we trade, right? This is a practice trade for us right here. Let's see the logic we have. So we saw the, Federal President place order 992 and 34. It gets executed. It get let's use another word. We don't like the word executed because it can mean in a negative way. So it's get order get filled. Yes, order get filled, right? Let's put that in. Oh my. Gut feel, right? So yeah, much better, get executed. So like you're gonna You murder somebody. Oh man, it's so funny right there. Okay, so we place order 32, right? Let look. 0932. Right there. I mean, when we just open the chart, when we start a recording at that moment, we saw, wow, that's a beautiful setup. And the target for it gonna be this sell-side liquidity, right? Let's see how it come out. That's an idea. That's a very good trade idea right there. And stop loss for 72.39, right? Which is right. The stop loss right here. We put the stop loss. Ooh, oh, too much right there, my friend. We don't even see that one yet. So we put our stop loss. Hold on. Is this? Hold on. Wait. Go back. Target. Okay, sorry. We mid trick is not stop loss. Basically, target is sell-side liquidity, which is correct. And sell-side liquidity right here. That's what we mean. At 472.39. Is that the number we got? Yes, exactly. That's our trade idea right there, and it worked perfectly. You see that? It get our target get hit right there. You see that? That's beautiful trade, and you see how much we reach when we pull right here, right? We got an entry right here. I mean, we got an entry right here, then 33 cents ish, you know. And how much we get? 82. 82. What's that? So 33.82. So that is our risk reward ratio right there. So 33 82. Is that right? Or 33 82, correct. Is that right? One. So what's the reward? It's 1, 2, 3. Almost just 1 to 2. Which should be good, you know, quick trade right there. By the way, before we go to this section, we already know, we are already thinking in our mind when we start today that because yesterday it's a huge move, so the morning section is very toppy, right? Because they make the big move, then you know, if the buyer already buy a lot yesterday, today they're not gonna aggressive, right? They buy big, that they want to, you know, wait and watch. And other people still stay in the sideline, right? Other, you know, participants, right? Some people they buy yesterday and now they sell. They want to lock in early profits, and some other people they want to seek other opportunities. So there are lots of things going on, and it's just the you know, psychological game right there. So it's the only way, you know, from our observation that the morning we toppy, and we told ourselves that we're not real trade, right? Today we want to take a real trade on Thursday, our rule, right? We want to take one real trade on Thursday and Friday, and we told ourselves that we will not take. We did tell ourselves that we're not take a trade in the morning section, but you know, it turned out we did. So that's the issue that. That's the one other thing that is exposed our impulsive or formal you know, emotion right there is still there. It's still so raw, and that's very wonderful because we find out you know, basically we discover ourselves. That's our challenge right there, and where there's challenge we will find opportunity to improve ourselves right there. And like we all know, right, trading is all about the psychological game, the mental game right there. Even though we know we're not supposed to do that, but we do that at the hit of the moment. So that means we need to improve our psychological game or psychological skill. We need to build up a skill. That's the most important. All of this technical is not really a big issue, because you know why? Because you can enter it randomly. You still win if you manage the risk right. That's it. Cut short the loss. Cut the loss short and let the profit run. That's it. But anyway, we should not, beat up ourselves too much when we take a loss, because take a loss is we should treat at normal, right? A matter of the part of the process, part of the game. We should not dwell and take too much emotion attachment to that. The more we take the loss easier and lighten, the better for us to get back into the mental game, or to improve our psychological skill set right there. Okay, so that's the first right there, and the second short setup right here. The second beautiful short setup also. By the way, this short setup, it doesn't have any so-called RSI diversion at all. It's just a very obvious or very quick trade, and it's a ritual good. Okay, the second one we do right here. Yes, right here, so obvious, right? You have this. It is a so-called resistance, or you can call it a buy side liquidity level, and as soon as they take that buy side and make a new high, then we go in, we put a buy stop. Accuse us, we misspoke again. We put a sell stop in here. It will carry it, or our order will get filled and we carry it out. And our target gonna be this sell side liquidity. Let's see how it's play out. Wow, so it's very tricky, which you see, right? But in this case, we have what? We have a diversion. You see that diversion, right? It make higher high. See the diversion, but the RSI make a low right there. So it gives us another confluence right here. Remember, we're going to come back to the RSI later, because the RSI can sometimes. The RSI is a supporting factor. It's not a decide factor. We have to distinguish. It's not a key factor. Remember that. It's a supporting factor. The key factor has to come from the price action, from the liquidity, level, or liquidity run right here. That's another word for price action right here. So as soon as it rate this buy side liquidity, or is break through this so-called resistance, a lot of system or a lot of people are going to go in and do what? They're going to go long, right? They thought it's going to be a breakout, but actually it's full breakout right there. And we aim our right here buy side liquidity. That's exactly happened. But however, when we sit through here, right? We thought, wow, are we gonna out of the trade or not? And at that moment, we get a little bit nervous right there. So that's the question why we put a note. If, man, we talk to ourselves, wow, it's so big, right? It get very discomfort right there, because you have what? Because when we enter it right here, and it go, it not go, no, the second trade. Okay, so basically we are entry right here, right? We can review this one. So we end it short right here, then our risk very little. I mean, that's the definition of low risk trade idea right there. You make the high for us, so we know where to put our stop loss right there. The market shows its hand right there. We stop loss just at that high, new high make, right? We put a sell order right here, and we got filled right away. So we reach 18 cents, right? And we're gonna target this outside equity. Okay, right here we face a question, we face a challenge right here, a decision we have to make. Are we gonna give back our gain, or we stay in the trade? That's the decision we have to make in real time, and it's very tough. It takes practice, it takes conviction, and at this moment we're still working on it. We're not master that skill set yet. So we're going right here, and at this moment it gives us a very handsome profits, right? 90 what? 96, 90, 95 cents, right? 95 cents, and we reach so it's almost 1-to-4 risk reward ratio right there. So if that enough for us, then we get out. But if we use our targets based on technical, not predefined risk reward ratio, then we stay in the trade. But here the reason we have to make, wow, look at that. We saw it go all the way at entry level. So right here you have to make decision right here, right? Whether you move to break even to get out at a break even trade, or you're gonna stick through this in order to get a better better risk reward. That's the reason we have to make. Now we look back, it's easy to it's so much easy said than done it right there. But if we move, right, we can stop out at that moment right there. And at 10:09 right here, we have to make a decision right here. It almost hit our 08, 09 right here. We get a little bit discomfort also, because we say, wow, it may rebound there again, and we don't want to stick through this swing again, because at human we are trying to what? We try to avoid pain, right? We already we already went through the pain right here, right? The pain of give back profits and hit our break even right there. And are we ready to sit through another pain right here? And so that is the psychological battle that we have to go through right there, and it takes time. It will not be easy. This stuff is very tough, because anything related to mental game and related to psychological skill, it not happen overnight. It takes time to be. But yeah, so we have to make decision right there. So right here, we either move right here to take profits. However, if we be patient and stick to our game, or we move our stop loss right here, right? That's the one of the key right here. We don't have to take early profit. Take early profit. We can move a stop loss to here. We move stop loss. Okay. But here now we have a solution also. So, or we move stop loss 10:02. to 1002 candle high. Yeah, if we want to move that, then we should wait right there. Then the original target sell side hit at 1050. Then the target, the initial target at sell side liquidity 472.26, right? That's our initial, right? Yeah, we'll have to put right here. Target sell liquidity at 732.26. 472.26. We got hit at 10.26, or excuse us, 15 or 16 for that matter. 15. Yes, so that's a lot of, if we stay in this game, we really our mental game, our psychological skill really strong right there. It's just practice. That's just be easy and be easy on ourselves and give our room to make an error, to fall, to make mistake, and we learn from that, and we get there. The more we fight against that fear, the worse again you're gonna get. Just embrace it, just welcome it and feel it. Yep. That's right there. Okay, so go back to the last trade we reviewed. Wow. We run out of time now, it's more time, but let's go to our real trade right here. So at this one, right, we take this short, this trade. I think I forgot to take a screenshot, but just basic idea. Our reason to engage right here. Yeah, we didn't mention that we started here, but for some reason, right here, yes, it's just the psychological skill set right there. Yeah, in the morning we have something to in our mind. We want to run in the morning, so that was when also we want to do in the PM, but somehow at that moment we just draw into the moving of the chart is really draw us like some kind of force, some kind of invisible or unconsciously draw it in and make it to click right there. That's how we feel, and I think that's the feeling formal right there, impulsive right there, and we need to still working on this to improve this, and we need to embrace this. We cannot fight it, this fear. We need to embrace the fear, right? We need to welcome it and feel it, and then release it. Don't fight it, because the more we fight, the more it's gonna get worse. That's the technique we learn, but we need to apply that. Become our habit right there. Right now, it's not yet. It's just it's just a knowledge, right? And it takes time for us to apply knowledge and practice that knowledge. Then it become our second nature, and then that will be no longer an issue for us. But right now, it is. It's an issue, and we recognize that. And we have the solution to improve that. So basically, because right here, right, that's how. So right here we saw, right here is level. It should be a 4 breakout, but actually it break down. So we thought, wow, it break out level, then it's gonna give a real breakout. You see right here, we thought gonna be retracement, and then boom, our idea is that it's gonna come down. We thought that we're gonna it on one all the way down to the level, and you know what? It did. Eventually, it did, but it's not at the time that we all want to. You see, it did hit that level at 1330. So that is another aspect that we have to pay attention. The time, right? It will get there. We are correct to identify the target when we thought it's gonna be moved right here, but it not moved right away. It trapped a lot of sell-side liquidity because it go down. So that's tricky right there. Yeah, so the idea that we thought on this is a real breakout. That's the reason why we put a sell order right here, and look at that. We in the money for the next minute or two, but we come back, we give it all, and it almost hit our stop loss right here, but we didn't go out that one, and it come down, and then right here we thought that too much, too much pain already. We already suffered a pain right here, and right here we thought enough. Hit our profit. Top loss. So we lost 30 what? We lost 33 cents right there 1 hour. So good, cause short lot. So that's how we lost for the real trade right there. And you wanna see. So the perfect right here is another setup for 4 breakout. You see, this level is 4 breakout. It break down here, put the buy stop right here, and it carry us. But you don't entry around here. You may entry this because it's gonna retest, and we have to go through the pain. But we accept it. You have to learn. You're not gonna perfect entry right there. They may entry right here and wait and sit through the volatility. It hit a stop loss, and we get it. Otherwise, we want it to play out to realize our target. So our target gonna be this one, right? And let's see. Right here. We'll do the documentation later, right? Because we run out of time, but just for the ballpark to get a roughly idea. So you have $1, 53, and how much you reach? Very tiny right there. 18 cents. The same idea. Extremely low risk trade here, right? 18. Wow, you got almost 10 hour right there. Beautiful 10 hour right there. You see that 4 breakout, and the same right here. You have another 4 breakout trade right here. You mark this right here, right? That's the level it hit. For our short trade, and now it's a long trade. The long trade and now short trade. The same idea go here. At soon as it above this level, put a sell stop, and you reach very little of the trade. You can reach at this level also. You reach 31 cents. And the same idea, you're gonna get the target. It's right here, $1. So anyone who have experience, they make a lot of money on this move right there. We're not there yet, so that's what we head into. So we believe we're on the same track. But by the way, if we are a little bit more greedy, we can trail stop loss, and it can hit all the way to the level right there. And more than that, it's below that level. Not the beautiful short trade there. And you know what? It happened around exactly our initial, idea that we will not trade short or pro breakout until after PM section, and that's what happened. So next time, stick to our plan. Don't do impulsive or formal trade. Okay, before we wrap up this recording, this session and update review, I think this is the last one we do for 2023. We want to wrap up this year, and we'll come back next year. So have a great holiday and see you next year. But before we left, I just want to show something. Here's the book that we are reading right now. We do research on it. And here the interesting that he outbroke, right? If you Google, let Google outbroke. Yeah, he's a price action guy, right? He writes lots of and he trade I think maybe 40 years whatever, but he's a very experienced trader right there. You can Google more about him. Okay, so but the idea that he says something that very resonate with what we are go through right now. So the journey is a long journey. You say a few years, right? However, it took me 10 years. So for our group, it took 10 years to become a successful trader. So we just in our first year, so we have a 9 years to go. So it's a long journey. We take time. Remember, time is on our side, so we don't need to rush. We enjoy each and every day. We in the market. We appreciate that, and just stick to the process, and success is coming our way. Just do what we love, and it took 10 years for him. So just the number I want to point out. The second thing we want to point out right here, right? Just recently we add the RSI, right? But here he say that about indicator, right? And that exactly happened to us, and we learned a lesson. Okay. Also, the oscillator make the trader look for reversal and focus less on price action chart. That is exactly happened to us, right? This morning we go into the trade, we saw the RSI from 1 hour time frame is diversion, then we don't pay action to price action. We just took that trade, and it turned out as that's why it lost, right? So for referral focus job, right, this can be effective too on most of the day when the price when the market have 2 or 3 reversal lasting an hour or more, right? If reversal, the problem comes when the market is trending strongly, right? Trend strongly. If you focus too much on indicator, you will be see that they are forming diversion all day long. That's why, and you may find yourself repeatedly enter a counter trend. That is the mistake we make. We need to avoid that and lose money. By the time you come to accept that the market is trending, you will not have enough time at the end of the day to recover your loss. So that's the experience he go through right there, and if that's the challenge we see right now, if it happened to us. So that reason why we have to be careful when we use the RSI in this case. So the RSI is not a key factor, okay? It's just a supporting factor. What happened on the charts is the key factor. So that's the last thing we want to point out right there. Sorry, we go a little bit over time, but I think we have a great 2023. We have a great time learning, discovering ourselves, and we learned a lot. We improve a lot, and we grow a lot. We look forward to 2024. It will be a great trading year for all of us. Good luck and good trading, and see you next year. Bye for now.